for those that don't know, I am born and raised in New Hampshire, a former Miss New Hampshire. And you know what? You can't be Miss New Hampshire without having a good understanding, if you would, of Bretton Woods, because it's an actual place. Not just a monetary system, it's like an actual place, Bretton Woods, New Hampshire, a little teeny tiny town where they have the Mount Washington Hotel. And I've been going there since I was a kid, like back in the day when like the wallpaper was all peeling off and they didn't have air conditioning and they didn't have heat. So it closed all winter. And now we go back and we ski with the kids and everything. I love it. And I always drag them to the Gold Room and they have to hear the whole shebang. I find this fascinating. I really, really do. Because you think about the turmoil that the world was in back then, and you had kind of the free world coming together and developing this monetary system that really had some underpinning and strength in gold. And now, fast forward this many years, Rob, and I'm looking at what the BRICS are doing, and it's kind of like history repeating itself in a sort of inverted way, if you would. But I know you've done a lot of research on New Hampshire too, and I think it's just a great story about how we had to kind of figure out what was ahead, right? Back at the end of World War II. And we kind of came to that conclusion in the decision there in none other than Bretton Woods, New Hampshire, at the Mount Washington Hotel, where all these delegates from all over the world joined forces to come up with a new system.
Yeah, including Russia. Although Russia didn't, like researching the history of it, Russia actually made a lot of demands. We conceded a lot, but the Soviets eventually didn't participate, and they didn't sign it on the dotted line and never participated in the system. But the system that was formed was completely. It was like a reintroduction of the gold standard. A dollar could be converted into, at a ratio of $35 per ounce of gold, and then all the other participating currencies would be based on like fixed exchange rates into dollars. So the dollar became like kind of the de facto, token for gold. And that
was
really
part of that because we had the most gold at the end of World War II?
Yeah, we had 70% of the world's gold supply. So we had all the gold after World War II because all the other countries were in debt. And we emerged from World War II as just the absolute best positioned economy, growing, and it really ushered in the kind of heyday of American capitalism. The 50s and 60s were phenomenal in terms of real GDP growth rate and unemployment and progress. I mean, think of all the technological progress that was made. I mean, we literally sent a man to the moon, right? I mean, the automobile, the air travel, the microchips. I mean, everything, right? Everything happened in those 2 amazing decades.
Well, there's a lot happening now too.
Yeah, no.
Yeah, we can talk about that on the AI front. It's not all here, right? We get some concerns about Taiwan and China, but yeah, no. I mean, it ushered in a tremendous growth era, and the U.S. was at the top.
But it ended. It ended in 1971 or 1973. We couldn't. There was a run on gold, and it broke. And the catalyst for that was Vietnam. We were incurring a lot of debt in the Vietnam War. Opinions will vary about the Vietnam conflict. I have mixed feelings about the whole thing, but the truth is it ran up a lot of debt and it stressed the country's finances, and it broke Bretton Woods. It broke the dollar gold convertibility. And we went into a almost 10-year phase of, high inflation, kind of high commodity prices. Gold soared. It went from like 35, which was the fixed, ratio, to $650 an ounce in 1981, I think, when the Soviets invaded Afghanistan. That's when it peaked. But then we had another period, like the late 50s and 60s, with the Reagan Revolution, and with the election of Reagan, gold would decline by 50% over a 20-year period, and people were gravitating to the dollar, not because it was gold backed, but because the American economy was reinvigorated and it was dynamic again, and the stock market was working again. So, there is hope, but and a lot of it, I think, kind of hinges on the dynamism of the American economy, right? But what we're seeing now is these BRICS countries are
trying to do their own Bretton Woods.
Yeah, they're doing their own Bretton Woods. It's like an inverse, and we're free floating, and we have fiat currency, and they're going to try to have monetary stability.
Yeah, I mean, they're going to try. I would say to a certain extent, good luck, because I still, and maybe this is, we titled this division in the world. I mean, maybe this is the great divide that's happening, because most investors I know aren't going to go throwing their money into a BRIC system, right? Because you just don't know if you'll ever get it back. It's just a whole, you look at China right now, and the most successful, wealthy people in China are desperately trying to get the money out of China and into more secure locations. That's just the reality, because the U.S. again is considered that safe haven. I think we have to be mindful of that. We have to protect it. We have to live up to our end of the bargain, right? Not run ourselves into the 34 trillion and counting debt category. But still, I mean, maybe that's the divide that's coming, where it's like, okay, whose side are you on here? And I don't think that ends well, by the way. Not to freak everyone out, but I really don't think that ends well.
You don't want to see the world splitting in half, right, into two economic zones or two competing economic blocks. But that's sort of what is underway. And I mean, to me, it's sort of, gold has moved because of that central bank buying as they seek to kind of form that new gold-based system, or that's one of the major reasons. But also, you think about gold in that context, it's like, if we are entering a period where, like I just keep going back to China and their designs on Taiwan, in a scenario where they finally act, that's going to be a very geopolitically volatile situation where gold also becomes very relevant, right? Like when you think about how I mentioned, like how gold peaked in the beginning of the 80s when the Soviets invaded Afghanistan. It's yet another reason to consider gold as a hedge.
As one of the things. Look, I just think it's very interesting right now, again, as we watch NATO unfold there, and we recognize that there is this pretty serious division. I mean, even just you look at NATO, for example, and it almost feels like, Rob, a continuation in a weird way of the Cold War. You and I have talked about George Kennan in the past, the ambassador to the Soviet Union during those Cold War days, and his hesitancy with the NATO expansion that was underway. Certainly, if you go back to Cheney, was kind of an architect of this, and then it lived on through multiple administrations, and now we're looking at sort of the straw that broke the camel's back, right? As Russia was finally okay, we've had it. So I think it's fascinating when you look at the history and you consider, for example, what Kennan was saying way back when, whoa, this is getting kind of out of hand. And I sort of wonder, in a way, if people just didn't know what to do with themselves, right? They had been fighting the Cold War for so long. It ended. And then all of a sudden, the whole NATO expansion thing just kept going and going. It's almost like we've still had this Cold War the whole time. It's not called a Cold War anymore.